Dear students, మరియు వర్కింగ్ అకౌంటెంట్స్, welcome to my Smart Tally Friend YouTube channel. My name is Babu Rao from Hyderabad. So before entering to our topic today, so an advice for you. See, if you want to learn Tally Friend, GST as well as TDS and TCS like an expert and gain expert knowledge and become an expert accountant, so you follow my advice. Just you follow and learn all my videos in this channel in the same order in which I upload the videos. You do like that, you will get expert knowledge and you will become expert accountant. If you follow there, view some videos, view the others, and again just go to some other videos. You learn like that, you cannot get the expert knowledge. So you follow them in the same way, in the same order in which I uploaded. Another thing is, I started online classes and batch running, and I'm starting the new batch for the Tally Prime with the GST, TDS, and CCS on second half this one. So by this time you view this video, I would have started, because if you get it a third or something, but second or third, you get a second. So I already start today, and second only I start. So you 1 or 2 days later also no problem. Anybody is interested to join my online classes, no offline classes, only online classes I am starting. So the channel, my channel and the videos, everything is completely free. You can view any number of times and you can learn well. But if you want the online classes, these online classes are not free. So they are only paid classes. If anyone is interested to join the online classes, you can contact me. You can send me the details like your name, place, qualification, the present work, your mobile number, and all these things. You send the details to me, and I will register names, and I will call you, and I will talk to you. And now, and for the contact details, so see this video in channel, the channel in the above section, there is my mobile number and email address, and on the videos, uploaded videos about the classes, in those also my mobile number is there. So you can send your details through the email address or through the mobile, only through WhatsApp. So you can send only WhatsApp message with all your details. You cannot call me, because you don't call me, because if you call, I will not get the call, because I am in another country. So around the 4 days, 4 months, I will be here only. So you please send only WhatsApp message with all your details. I will call you and talk to you. And from second onwards, I am going to stop mostly on the day, Indian time, 8 o'clock in the morning. In the morning, 8 o'clock, I am going to start the classes. Every day, 8 o'clock only. I am going to start. If you are interested, so you can contact me and you send the details of the register again. And the next thing is, this one, everything, every time. I tell you, I ask this one at the end of the videos, but now I am asking in the beginning itself, it's better. Everyone who are visiting my channel, please subscribe to the channel. First, if already you have subscribed, so you cannot subscribe second time. If you are not done already, you can subscribe to the channel and click the bell icon and select all. Then you will get all my videos in the shape of that. You will get notifications for all the videos which I upload. And then share my channel, Smart Tally Friend, with all your friends, as well as anyone working accountants or students, anyone who want to learn this Tally Friend with GST and TDS, TCS. So share with them also. While viewing this video, you please view the video, see the video till the end, don't skip, because if I start there, if we take up the topic, so in the beginning, so this discussion and the details and everything about the topic will be discussed, then any rules or any settings regarding that one, so that will be discussed in the beginning, and then we will start the working with the Tally Frame, how this settings and all these are implemented in Tally Frame, and how the transactions are recorded in tally frame according to the given settings. So that will be coming in the next quarter. I mean, second half. That is, if you view the video only in the beginning, you learn only the theory, and after that you skip, you cannot understand how to implement and how to record in the tally frame. So you view the video till the end, and then at the end of the video, just the video is good, like my channel, that is like my video by pressing the thumb icon, and then below that in the comment section, you please comment your idea. You post comment about your idea about this video, about this video, whether it's good or not, or any problem or anything you cannot understand. All this you post in the comment section. Then only I can understand how you are receiving this video. And if there are regarding these doubts, all these things, I can try to make another video for all the doubts. So I will take up many doubts, and for all the doubts, I will make one video. Like that, you definitely you post your comment. Okay, now we will enter to our topic today. We share the screen. See here. In the last class, we started about discussing about the GST reports available in the tally frame. GST reports, so on the basis of all the transactions recorded, purchases, sales, and everything, all the transactions recorded in our tally frame. So it will automatically generate the GST reports. So these GST reports, how to see the GST reports? There are two ways. First of all, so where you are in any other page you are working, if you want to see that without closing that work, if you want to see the reports, click Alt G or C on the top, there is go to. Click that go to function or click Alt G in your keyboard. So you go here and on the search bar, just you write GST. If you type, so you get the G page, GST reports, 1, 2, 3B and all these things. So these GST reports you will get. And if you click anything, that will open. Okay, this is one. Or if you are in the gateway of tally, then go to D, last one. Display more reports, short key is D. Then GST reports, short key is O. Short key is O. Click that, so you get the same thing, GST reports. So already there are 3 types of reports. And first one, GSTR 1, GSTR 2, and GSTR 3B. GSTR 1 and GSTR 3B are to be filed to the government in the GST portal. But GSTR 2 is not a return, it is not to be filed, it is only just it is a report, but it is not named as GSTR, named as return, but it is only a report. This is useful for us for comparing our these details with the portal that I will tell you. So in this, the first one is related to, I am taking the total period, but actually it will show every month, April 1st to April 30, like that monthly it will show. In the case of quarterly filing, it will show quarterly, 1st April to 30 June, like that. But there are only little transactions. I have taken the total period till the end, 1st April to 1st November. 1st April to 1st November, I have taken totally. And already we discussed about this one. In this, there is one thing to then see here. In the last, when you did the video, so credit or debit notes registered means they are related to B2B. And then debit or credit notes unregistered means they are related to B2C large only, not B2C small, not related. They are related only. Unregistered means only this one, this B2C large. So in this case, that was not there. See here, I will show you. Now I entered one. So you select this one. You see here, their details are given. The details are given. So if you click, this is the debit note, credit note, because in the case of we are selling, so we issue credit notes. In some cases, we issue debit notes. So here, 25,000 is the taxable value, and this is the integrated tax, and this is the tax and MI expense. Here, so this is shown separately regarding. See here, this is B2C large. If you take, there are 2 invoices from the same company, 88 and 22. So against this, one debit note, a credit note is available. Here you see, this is the credit note. If you go here, see here what is the original invoice number. The original invoice number is 22. So 22 is the original invoice number. So if you see here, see, there are two invoices, 1822. Against this 22, the credit note is issued. So this is against the credit, sales. Okay. So this is all. And another one, I told you, I did not show anything. B2C small. So the debit or credit notes relating to this B2C small, where to enter, they will not be entered separately. This is related to only B2C large. So regarding the B2C small, their debit or credit notes are not at all entered separately. They are deducted from the respective invoice. So the credit note is issued against a particular invoice. So from that invoice, this credit note, the taxable value, that is taxes, everything that will be deducted from that and shown here in the books. We enter separately only, but in the report, it will be deducted from this respective invoice and net amount will be shown. It is called net of credit debit notes because when you are entering the small and B2C small in the portal, what we have to, in the portal, what we will do is here, B2C small, the portal, when you are entering itself in the GSTR 1, so any credit notes or debit note is increasing, credit note is reducing. Any credit note is available, that is to be reduced, net amount is entered. For example, I will open up. In the case of B2C large, it will show the parties. But in the case of B2C small, it will not show the party. It will take only the net details of the states will be state-wise, not party-wise. See here, in Andhra Pradesh, this is the total. Tamil Nadu, this is the total. Telangana, this is the total. So in see Andhra Pradesh, so there is one credit note. See here, there is one credit note. So it is reduced and only net value is taken. See here, see net value will be taken. So net value only, taxes also. Only net value is taken here. And then that is net value is entered like that. In the books of account we recorded, it is adjusted already. And in this case, there is no credit note. So that is the actual. Here in this case, in the case of Telangana, here in the case of Telangana, so there is one credit note. There are here, this is only one here. There may be many, and here also only one. So there are many sales. All the sales will be shown under from the respective one thing. It will be reduced. Here, in the case of Telangana, you see, so there is already Ranga and Co, and Ranga and Co it is reduced, and this will be taken. The net amount only will be taken. The net amount only will be taken. Okay, like this it will show. This is not shown that type. And we'll go to the next one. This is relating to the outward supplies or sales. Outward supplies, sending out means sales. This is related to the sales, outward supplies. And the next one is GSTR 2. This is, again, we take the profit period. This is relating to the purchases, sales and purchases. This is related to purchases. Whatever purchases we recorded, that will be shown in this report. This is purchase report, but this is not going to be filed. So for sales we are making, and we are submitting GSTR 1. So the portal and the government will know about the sales. But these purchases, we are not filing GSTR 2. We are not filing. So how the portal or the government will know about our purchases? So that is the thing. The thing is, see, when you are filing GSTR 1, we are giving details of all the persons to whom we sold. That means to whom we sold means who are the persons who bought from us. Similarly, in the case of GSTR 2, in the case of GSTR 2 here, in the case of purchases, not in the case of purchases, the government and the portal will know about this from the GSTR 1 filed by the sellers. When they file, they will show the details of the buyers and the invoices. So our purchases will be shown by our sellers. They will show. So on the basis of the sales made by, and on the basis of the sales and on the basis of the GSTR 1 filed by the suppliers. So for each buyer, so I am a buyer. We are buying things. So on the basis of the invoices mentioned in there, GSTR ones for each buyer, each person, a 2 reports will be generated automatically in the portal, not here. They will generate automatically. They are related to purchases too. So they are called as 2A and 2B. So the two statements, they are called GSTR returns only, but they are only statements. They will be generated automatically from the invoices mentioned by the sellers in their GSTR1. So from all the suppliers from whom we purchased, so we will get in our, for every person will get. So in our GSTR2A and 2B generated in the portal for us. So relating to us. So they will, the 2A and 2B will show all the purchases we made from them, but not all the purchases shown in our books. Suppose if the persons, that is the sellers, if they file and they mention all the invoices, so whatever we purchased and shown in our GSTR2 will be same as their GSTR2A and 2B, because they filed everything and they mentioned all the invoices they uploaded. Uploading means mentioning the details. All the invoices they mentioned in their GSTR1. That means whatever we purchased, they are showing. So in GSTR2A and 2B, automatically they will be generated, and all my details, our GST returns, GST invoices, details will be available in there also. So that is the thing. So this GSTR2 is generated here in our books by Jali. This is useful to compare our 2 with 2A and 2B, because we are purchasing, we are showing the purchases. So it is showing the purchases. But when they are 2A and 2B are generated from the sellers on the basis of 2A by the sellers, so both must be same. We were purchasing, they are selling, so we are showing purchase, they also shares. And suppose if any of the sellers, if they miss any invoice relating to us, regarding our invoices, if anyone misses, they are not mentioned by mistake or something, they have not mentioned the invoice, then only other invoices will be shown. In such a case, there will be difference between our GSTR, that is our books, is nothing but our books. That is GSTR2 generated from our books. Between this and GSTR2A to B, there will be difference. They will show less, because, for example, there are 10 invoices we purchased. There are 17 here. Here there are 17 invoices we purchased. 17 invoices we purchased, but they filed, all the sellers, they filed our invoices, they mentioned only 15. That means in the GSTR2A and 2B, only 15 invoices will be shown. So, but in our books, there are 17. So, to compare this with 2A and 2B, to find out what are the missing invoices. So, what are the missing, what are the missing invoices? To find out the missing invoices, and we can contact the sellers and ask them, they are missing, so ask them to file without fail, like that. So that is why this is useful only to compare with 2A and 2B. So they are generated on the basis of the sellers GSTR1. You get one doubt. So that is, both are generated on the basis of what is the necessity of 2A and 2B. One is enough now. So there is a difference. So they will come, they will be generated on the basis of the GSTR2A filed by the suppliers. But there is a little difference between these two. So I will tell you, we will take up later. Now we will take up all this. This is the return relating to the purchases. So here it will be same as, so GSTR2 or GSTR number, the period now I have taken from April 1st to ending. So this is showing, either it will show April 1st to April 30 or April 1st to June 30, like that. And then total number of vouchers, same as in one. You see, all the vouchers relating to any transaction, this is the total number of vouchers. Then here last one is not relevant in this report. Not related to this report means they are not shown, they are not related to this report means only others are related. That is only sales and debit notes, credit notes related to say purchases will be shown here. So 43 means 60 minus the 43 means balance 17 are related to this report. That is purchases as well as debit note, credit notes. So here, that is why. So not relevant in this authority, that means balance included in the return 17, included in the return 17, but If there are any errors, that is uncertain transactions like that, there are errors that will be reduced. The error is that is any uncertain transaction, those invoices will not be included in this. So here there are two errors, two invoices. It will show only 15. Here also it will show only 15. Two will not be included. If you rectify them, if you solve them, then it will show 17, and that will be included here. It will go 17, and these will be shown here, ready for return, but invoices with mismatch. If there is some other, this is relating to GST details. This is some other what we call any other problem which is given here, and that will not affect these details. So it will not stop coming to here because of the errors, there is no effect on these tables. Because of this uncertain transactions only, there is effect on this. That uncertain transactions vouchers will not be shown here, but here only we have to rectify, but it will not affect this. Okay. So this is about the first one. The second one has different tables, means this is number of vouchers, that is vouchers count plus errors, number of vouchers in which we have errors. That is the thing indicated in the first part. Second part, the nature of the vouchers, that is what is the nature of the vouchers, they are shown here and in the shape of tables. The first one is B2B invoices. Yeah, B2B is business to business, means this is purchase. We purchase from a registered person. In the case of one, B2B means sales to registered person. Here B2B means purchases from registered persons. They will show here. And then in the case of that one, we have to pay. Here we have to get back. So it is called the tax paid will be we have to get back. It is called input tax credit. So here it shows the taxable value, tax paid by us, and that amount is to be received, which known as total ITC available. Whatever we paid, it is available as ITC for us. But as per the 2A and 2B only, we have to take. As per our books, we cannot take the ITC. We can take the ITC. That means if they file, means they will pay the money. So if they pay the money, only you will get. That's why if they file GSTR 1, in that these are mentioned, our invoices are mentioned, then only we can get the ITC. That is why this is only for our reference. But depending on 2A and 2B, we have to take the ITC. Okay. And see here, 3A, that is B2B invoices and credit note, debit note, registered. Regular means registered. Relating to this. So I told you now, we have to compare this with the portal GSTR 2 and 2A and 2B. That is given here to be reconciled with the GST portal. Is to be reconciled, means compared with GST portal, and other details related to these purchases here uploaded on the GST portal is B2B and registered. See, in the case of sales, they are called as B2C. Means selling to B2C means consumers and unregistered business. So consumer is also called C. Both are combiningly called as B2C, means consumer as well as unregistered business. But in the case of purchase, consumer will not sell to us. We cannot buy from purchase. Consumer is not a seller. So we cannot buy from the consumer. We get only from businesses. This is business to business registered, and unregistered business means it's called business to business. You are unregistered. That is from unregistered business. We are get this is called B2C is different. That same B2C consumer also included. Here B2B VR means only the unregistered businesses. So what are the purchases made from them? And in that case, we are showing export of goods. But in this case, import of goods. Purchasing. Import of goods. Import means here, there, we sell, we show exports totally. Here, separately, import of service, import of goods. We have to show that will be shown separately because is everything we enter in the books. So this will take. And credit notes, debit notes, unregistered. Related to these people, unregistered people, debit notes, credit notes, nil rated invoice. Nil rated means nil rated. See here, nil rated, exempted, non-GST goods. In addition to this, one more here. Exempted, nil rated, non-GST goods. There is one more here, composition, because exempted goods means we are not paying tax. Nil rated, not paying tax. Non-GST goods, not coming to GST at all. This composition is the, I told you already, dealers, registered dealers are two types. Registered dealers, one is regular, another is composition. At the time of creating a company, type of registration, regular, composition. So here, composition dealers cannot collect. They can sell. Regular dealers, they can collect, They can sell the goods, they can collect the tax. But the composition dealers, they can sell the goods, but they cannot collect the tax. So we purchase from this type of goods, there is no tax. So we purchase from consumer composition dealers also, there is no tax. We cannot pay tax to. They will not collect tax from us. So we will not pay any tax. That's why this is also included. Okay. So this is the thing. And advance paid, like in the GSTR one, advance paid liability and advance paid on that liability tax. Here generally, when you are receiving advance from customers, it is shown there in the GSTR one. Here, if we pay advance to our suppliers, it is called as advance paid by us. So any liability on that. And in the next month, if the invoice, the seller issue invoice supply goods to us, then that advance will be adjusted. So adjustment of advances. So invoices will be shown here, and adjusted advance will be shown here. Advance paid, advance adjusted, and all these things. And another total inward supplies received and total tax. This is taxable value. This is tax. Okay. And ITC reversal reclaim. This is called as, suppose if you claim the ITC by mistake, so which you cannot, any ITC which we cannot claim, if you claim that, it is called wrong. So extra illegal, ITC. In such a case, we have to return back, we have to give back the ITC. That is called a reversal of the ITC. We have to reversal that ITC already we claimed. And reclaim means there is some rule when you purchase goods and pay the tax and everything to them, and we can get back the money. That is the ITC we are getting back. But there is one rule: when you purchase and credit and pay the money, credit or anything, when you purchase the credit and the tax liability, we are, the tax amount we are getting as ITC, but we have to pay the bill amount to the supplier within 180 days. By purchasing and credit, we are getting the ITC are taking, but we have to pay the amount to the seller, the invoice amount to seller within 180 days. It's okay. If you don't pay within 180 days, so the ITC already we claimed, it is to be reversed. So it will be shown in ITC reversal along with others. But after that, if you pay money to the invoice amount, we pay to the seller, then again we can claim. Again, first we claimed, it is reversed. Again, if we pay the money, we can again claim the ITC. It is called reclaim. So the total number of invoices, all these things will be shown. And there are some reverse charge. I told now. Reverse charge means, it is, I told you, generally we purchase goods, we pay the tax amount also in the invoice. That is simple. And the seller will pay to the government, we will take the ITC. But in some cases, the seller will issue the invoice to us without tax. He cannot collect tax, he will not collect. We will pay only the taxable value to the seller. Tax we will not pay. Tax we will pay to the government directly. That is called reverse charge. That is normal charge. Normally we do that. This is the reverse thing. So reverse charge mechanism is called. Under that, if you pay the government the amount, you can pay, you have to pay the liability. Just like sales. Just like sales, you have to pay. Even though it is purchased, just like sales, that is called as inward supply liable to reverse charge. So we have to, even though it is purchased, we have to pay the tax, so it is liability. So that liability is to be paid as well, just like GSTR 1, just like the outward supplies, we have to pay. We will pay and we will pay cash to them and pay government, and we will get back the ITC. So that reverse charge liability we have to show here. And if the liability is paid, we will get the immediately liability, ITC will be generated. You have to pay cash, get back the ITC at the same time, in the same month, pay cash, take the ITC. Okay, like that. This is the thing. And this is about the GSTR 2. Here, see in the case of GSTR 1, GSTR 1, GSTR 1, see here, taxable amount, tax amount. This is total tax. This tax, what is the component of total tax amount? Component is IGST, CGST, HGST. There are 3 types. So this is the total of all the 3 types. So where is the details? So to know the details of the 3 types of taxes, so between these 2, you can get IGST, CGST, and SGST details in any table, in any one, GSTR1 or GSTR2, and the other one GSTR3B also. Okay. In such case, we have to go to F12, or here F12 you can click or see in the bottom, the right side. F12 is very safe. So configuration means F12 configuration means the options will be only related to the page which we open. So here we are here in GSTR1. So here 1 or 2 or 3B. So if you go to F12, it will show the regarding these taxes only. See, show tax types in separate columns. Yes, correct. And save it. See, all the taxes are shown. So it is shown and it is shown. In between, these are not shown now. Integrated tax, central tax, state tax, everything it will show. Similarly, in the case of 2 also, here only tax available. This is the tax paid. This is the tax. It is available. So this consists of 3 types. This also consists of 3 types. You go to F12, make it yes. So here, total tax paid, tax amount, all the 3 components. Input tax credit available to us. This is also shown. So all these details are shown. This is about GSTR2 related to purchases. Then go to GSTR3B. Again, here also you will take the here. GSTR3B is related to the payment. How we will pay? So the tax liability as per the GSTR1 and GSTR2 in our books in the portal 2A, 2B. As per them, we get the ITC. So the difference between the tax liability, that is the GSTR1 means tax payable means liability. So the difference between the liability and the input tax credit available, the difference has to be paid to the government. If the liability is more, ITC is less. So the difference you have to pay. If IT is more, ITC, liability is less, then we need not pay anything. The difference is still our money. So the difference will be carried forward to next year ITC. So still we have more ITC. So in this case, what is ITC available? See, eligible ITC, 6,34,000. But what is the liability? This is the reverse charging, what we call outsource available. 5 lakhs is done. So still there is some 1,33,000 change. 1,33,000 change. The ITC is more. In this case, is 1 lakh. We need not pay anything now. And this difference 1,33,000 change that will be carried forward to next year. Okay. And in this case also, everything is saved. So return number, GSTR3B, what we call GST number, the period. Now we are taking the full period. Then total vouchers, 1, 2, 3B, everything. Total means all the transactions. And here, not relevant in this report. In this report, they are not relevant for 3B. So here it is 10. Because why it is 10? Because this includes both sales and purchases. That is why only 10 not related to this, and balance 60 minus 10, 50. So all the 50 are okay. So it included in the return 50 means there are no errors. So no uncertain transactions. If there are uncertain transactions, that will not be included in the return. So the difference will be shown here. That is only the balance. There are 2 uncertain transactions. So that here they will show only 48. The only 48 will be included here. When you rectify that, that will be added to this report. But here this will be taken to this place, and now no direct implication in return tables because there are some errors. These errors have no implications, direct implication on the return. So that will not be reduced from the return, but it will show, and that will be shown reduced from the, that is while participating in return tables, it will show. So if you rectify that, that will be okay. But it will not affect the return. So only the uncertain transactions will affect, they will not be including this, that will reduce the number. So in this case, so this is the work of the first part. The second part, the transactions, the type of the nature of the transactions. First one is 3.1. Outward supplies and inward supplies liable to reverse charge. I told you now, outward supplies means yes. So if you click that, you will get details here. So outward supplies means supplied outside, only taxable, GSTR1. So this outward supplies tax liability will be taken from the GSTR1. So from the GSTR1, automatically it will come to the GSTR3B in our books as well as in the portal also. So here will show that GSTR one only in the beginning, first one, total it will show, but in the taxable, see these are all, see here the details out of this. This is the total amount. This is the total amount. Out of that, that includes taxable, non-taxable, everything. Out of that, what is the taxable? Out of that, see, outward taxable supplies. That means only taxable. Other than zero rated, ill rated, exempted, they don't have tax. That means taxable means this is the taxable. So this is the taxable amount. And in that, outward supplies zero rated is not there. Outward supplies non-ill rated and this one that came on in the beginning. In the GSTR we have 21,000 and the inward supplies liable to reverse charge. I told you now, liable to reverse charge because this is also a liability. Reverse charge mechanism, even though they are sales, you have to pay the tax. That is also included here. It is included in the liability. And non-GST goods, just only goods, there will be no tax. Nil rated, zero rated, nil rated, and exempted, there will be no tax. But what is my zero rated? Zero rated means zero rated of outward supplies. Zero rated means exports. Zero rated means exports. Exports, in next case of exports, they're all exported to other countries. Exports means exported directly, DE, or sold to the sales units. It's also treated as export. And when they are exporting, sometimes they're exporting to other countries means it is treated as IGST, interest rate. And when they are supplying to sales unit or exporting, sometimes you have to pay tax. Sometimes you need to pay tax. If you have to pay tax, here it will show the amount and tax also. If there is no tax means it will show the amount only, but no tax will be there. That is, when they are exporting, there is one certificate called LUT, letter of undertaking or bond. Letter of undertaking, LUT, letter of undertaking, LUT, letter of undertaking, LUT, letter of undertaking on bond. If you apply to the government and you get it, if you submit that letter of undertaking, you need not pay any tax when you are exporting. If you don't have that LUT or bond, you have to pay tax, but that will be taken as, you will get it back as ITC. You will get back at ITC, but you have to pay. If you have LUT, you will get that pay. So that will be shown here separately and the non-GST articles, everything. This is the total amount. This is the total amount. The value of this is exempt, ill rated. These are purchases. This is liability, sales, exempt goods sold. This is relating to the, this is the eligible ITC purchases, and this is the ITC. You don't have any ITC. This is the related to the nil rated. Here also there, nil rated exempted. Here also nil rated exempted. They are sales. These are purchases. Purchases, this one. All these things are available. Details are shown. So, and this is taken from the GSTR one. And whatever we purchased, we get the ITC. So that will be shown as eligible ITC. Eligible ITC. This is the, they will not show the taxable value. So integrated tax, central tax, integrated tax. Showing differently. Integrated tax, central tax, and this is state tax. Sales and state and central will be same. Integrated will be different. And this is the total amount of tax that is ITC available. This is will be taken in this report. This is taken from our books, but in the portal it will take only not our books as per our books. It will take only the as per the GSTR 2A to B. Okay, I will tell you the difference also. GSTR 2A to B. This will take the ITC available. Okay, so in this case also, if in this one, GSTR 1, GSTR 2, that is, there are no errors. So in this case, all the amounts will be carried. See here, first of all, we will go to the GSTR 1. Just one day, one thing. See what is the total taxable, the total amount. Total taxable amount is 28,16,000, 188, 155. 2816, 188, 155. You see here? Here. See, 2816, 188, 155, 155. So, okay, like now, and in the case of GSTR 2 purchases, see, what of that thing? Taxable amount 3971 and IT is available 634. See here, go there. Taxable amount it not show for the taxable amount it will not show. In this case, it is showing only, see here, eligible ITC, 134, 113, 400, 260, 260, total amount is 20. Here taxable amount is not shown. So total amount is 6,34,000 ITC in GSTR 2B. In GSTR 2, see 6,34,000. Tax paid, ITC available. There also it will show. It will show the tax amount. That means it is the tax available, input tax paid available. Okay, this is the amount 6,34,000. So everything is correct. This will show. But that means if there is any error in any case, that is to be rectified. There will be these amounts will not carry. In the next class, what we do is we take some errors. What are the different types of uncertain transactions or mismatches? Uncertain transactions or mismatch transactions. I will take some examples and I will show them in the next video. Okay, and here I told you already. What is the difference? Sorry, what is the difference between GSTR 2A and 2B? GSTR 2A and 2B. The thing is, both are related to, they're only statements. One statement, that is GSTR 2A, is called as, another name is statement of purchases, because whenever we purchase and whatever the suppliers filed, that will go to the GSTR 2A. Any, irrespective of the month. Suppose this is April. This is April. So, for example, previously for the month of March, we have to pay. We have to file the document. GSTR 1 in April, isn't it? For the month of February also they have filed. Now we filed both for February return and March return we filed. So this ITC, that is purchases sold by them, that is our purchases. That is our 2A. In our 2A, so both will be shown, but for every month 2A will be generated. So February return will be shown in February 2A. March invoice will be shown in March 2A. So our 2A every month will be there. So February invoice will go to the February 2A. March invoice will go to March 2A. So it is called dynamic. Whenever you file, it will accept, it will show in 2A in the respective month. That is the month for which the invoice related. And this is called dynamic. It is going on today. A person filed GSTR 1. So that will be shown in that. So that 2A will change. And tomorrow another person will file. So our purchase, there is one more invoice. So that will be shown. It will change again. That is why this 2A is called, this 2A is called dynamic, because it is changing. In the case of this 2B, it is called static, because whenever you file the document and file the GSTR, it will not take to that particular month. Whenever you file the GSTR 2A and mention the invoices, that will be taken to the 2B of that particular month only. That is month of filing, not related to the month to which the invoice relates. It will not go there. It will show only in the month in which it is filed, and that also in the case of 2A, any person can file any time, it will go to the return. But in this case, it is static, means only if the seller files GSTR 2A within the due date only. I told you, see, GSTR 2A for any month is to be filed by 11th of next month. For 2A, the date is 11th of next month. In the case of, this is for monthly filers. In the persons who are filing quarterly, at the end of the quarter they will file, and also every month they will file sometimes IFF. Only the details of B2B invoices will be filed by them, so that the buyers will get the ITC. They will file the returns relating to, the details of the only B2B sales. So they will file. That is called IFF. That is also called mini GSTR. GSTR, I will file all the details. But IFF, we file only the details regarding B2B's invoices. Only B2B. So this B2B invoices that IFF should be filed by 13. So GSTR 1 for monthly filers, it is 11. For IFF, for quarterly filers, it is 13. So before that last date, that is then last due date, if the returns are filed, they will be taken to the GSTR 2B of this month. If the seller files after the due date, the return, I mean, the invoice details will go to the next month. So we will get ITC in the next month only. So if from GSTR 1, the seller, if they does not mention some invoices, they are not filed some invoices, it is not a loss. Whenever he files, then we will get the ITC. So that is why this is called static. Only for that one. And after that, it will not show. Whenever you file after the last date, it will not show in 2B. It will show only after completing the due date, that is 13th, 11th and 13th. After 13th, 14th only the GSTR 2B will be generated only once a month. But in 2A, it will be there always. Whenever you file, it will show in that. But in the case of 2B, it will show only, it will not show every time. Only monthly once on 14th, the GSTR 2B will be generated and all the ITC available will be shown in that. Only that ITC you have to take, that will be taken automatically into this one. GSTR 2B in the portal. In our books, it will be shown as our books, as per our books, and in the portal, it will take only the as per GSTR 2B. Okay. So this is about, in the full details we will learn about that, what are the different files, how to file, that everything we will learn more about these returns at the time of filing and showing the file. So this is all regarding the GSTR reports as shown in our book. From the records, that is transactions recorded by us, it will generate these reports like balance sheet, like debit, like outstanding reports, all these things, like these reports will be generated in our books, in our tally. Okay. And if there are any errors, so all the amounts will not tally. Unless we rectify them, we cannot file with the government. We cannot file with the government. We cannot file in the GSTR portal. Everything should be, uncertain transaction should be 0. Mismatches or HSM details, wrong errors in HSM details, everything should be 0 only. So with this, we stop. In the next class, I will take up some errors. I will give the different, I tell you the different types of errors and what is the effect if that error occurs, how it will affect the returns. So errors, that is mismatches and uncertain transactions, their effect in the returns, that I will show in the next one. So with this, today's class is concluding this class. Please subscribe to my channel, view the video till the end, and if you want to enter, join the online classes, you can send their details to me. And the other thing is, you follow these videos in the same order in which I am uploading. This so we'll meet in the next video. Till then, goodbye. Thank you. Goodbye.